Alright, we're live. There's speed trades, guys. Let's see what's going on today. The SPY has lost a lot of its gains from the last previous months. Keeps coming down. Right now, trading at 573. It looks like it wants to bounce back, but I don't see it happening. I really don't see it having the momentum right now. We'll see what else on the news. Let's see what else is going on here. What else? What else is happening around the world? I saw Apple coming on the taking the upper hand here. Let's see if Apple is tracking. So Apple doing a little better than expected. So I trace here a fair value gap that I found on what minute? Let's see here. I think it was a 4 hour. Was it 1 hour? It was half an hour. Yeah. Almost a fair value gap there. Pretty much. And it's just bouncing in this region. It's a key area for liquidity. And we are just seeing it bounce here. So nothing concrete, nothing that could tell me, hey, let's place a trade right now. Nothing like that. In the 1 minute chart, I mean, we could have entered here for a downtrend, and right now it's picking up. Didn't put a trade, not yet. I don't know. I still have a feeling that it could go either way for Apple, specifically for Apple right now. What else is on the news? There you go, Trump tariffs.
Recently expanded to technicians, and that's where we're seeing some of the most amount of demand. Our health system customers talk about the technician shortage today feels like the nursing shortage of 2021. And so technicians make up 30% of the entire healthcare workforce, but there's tremendous labor shortages in that area today.
What kind of jobs are those? Like when you say technician, is that someone who's operating like an X-ray machine or something, or someone who's working in a lab, has like a science background, or what is that kind of, what's that draw coming from? What are the end results that products that are forcing all this hiring?
Yeah, that's right. So I am referring to imaging technicians, surgical technicians, okay, lab technicians. Essentially what's happening is that the U.S. population is growing and it's also aging, which is putting more and more strain on the U.S. healthcare system and an increased demand for these types of procedures, whether they're surgeries or imaging services. And we as a country, we haven't increased the number of technician workers to keep up with that demand.
So did some of this start, I mean, the demographic stuff was, we could do the math for a while now to figure out this was coming. How come the market didn't properly prepare? Was it distracted by COVID stuff for a couple of years there?
Yeah, so I mean, the reasons are not completely clear. You're right. This has been going on for a while, and it was absolutely predictable. There's a few issues going on. First, the number of training programs that train technicians has actually decreased by 15% over the last few years. And also, the number of Americans who are aware of these professions and wanting to go into these professions has also declined a bit as well. So as a result, we're just facing a pretty big labor shortages with technicians. The labor shortages with nursing and other professions in healthcare continues as well.
Okay. The stock market and investors, we've been noticing how strong healthcare companies have been, and a lot of kind of stock market almanac stuff tells you that they should be considered a defensive sector. It seems like the level of hiring and activity there would suggest that's the right way to think about it, that there's a fair amount of like secular force in the trends you're describing that may be unattached to kind of the broader economy. Do you find that to be true, or is that a stretch?
Yeah, that's right. I mean, because the demand on the healthcare system continues to grow, revenue is growing for the U.S. healthcare system. However, there are some
Guys, right now will be a nice position for a short.
Labor costs. Labor is their biggest.
We just
cost,
bounce.
also
Oh, a
has
small
very low
bounce.
margins.
Never mind.
And so, a health system's ability to.
Oh, wait for this confirmation candle. What it does? If it goes down, if it goes up, it's trending up right now.
Well. And then there are some headwinds potentially coming from Washington.
How's it looking at the 5 minute?
In terms of potential NIH cuts and Medicare cuts, which would impact.
So the levels on orange are the ones that you could expect a bounce.
Road, bumps in the road here for otherwise what seems to be a pretty strong secular trend.
What a nasty day.
As far as your business goes,
there it is.
Are you guys looking for funding through public markets? Are you looking for big deals? It sounds like some of these hiring or staffing businesses might be interested in buying you.
There it is.
Yeah, so we're a software and AI-enabled career marketplace for healthcare workers. We're pretty well capitalized. We raised $100 million, and we were valued at over $1 billion. Not looking for investment at the moment, and no plans to go public. We're just very much focused on our vision and mission of helping healthcare professionals live better lives and helping them find and do their best work.
All right, thanks a lot, Dr. Mon. Appreciate your time.
Thanks for having me.
Good introduction to the business and good connection here into maybe why there is some safety in the healthcare trade. It's working again today, basically. You've got a few sectors up, and the market held in there as it was really falling apart. We managed to find some line in the sand. When we come back, we're going to take a look at some charts. Rick Ducat, Alex Coffey, going to look through the financials as they are dragging today. We're going to look at the 10-year as well and the S&P. Be right back.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Stocks are holding in here. Rick Ducat, Alex Coffey, going to look at some charts and talk some action with me here. Alex, we are holding in for futures 57.70 right now, index 57.60.
Yeah, get a little 30-point pop off those lows down in the 40s. I mean, these are
Cavalry's
these moves,
here.
I don't know if the cavalry is here yet.
Plunge protection team.
Yeah, which doesn't exist as far as I know. It's a fun joke to make though. But cavalry maybe has arrived. 30 points off the lows is nice, but we've had a couple of these pops throughout these moves, so that's actually more reminiscent of down markets that have like these vicious spike backs that just don't last.
Fade
so.
them.
head on a swivel type of a day, but I do want to bring some
By the way, if you
market
think about it, sorry to interrupt. If you think about it, that's the way it's been since the get-go, which is different than 2022, the bond bear market, where it was like this outside force, kept every day. Once you saw a yield spike, you go, all right, here goes stocks. This has been from the beginning a fake out.
I would also say, too, there was like VAR shock stuff going on in 2022 where there were so many funds that were the 60-40 funds that were modeled to have their risk-off exposure and
they
bonds,
just had to
and it was
liquidate.
both not working. And then there was adjustments being made that like exaggerated things. You're not necessarily having that right now. Things are performing as expected. But I got some stats for you.
Okay.
Only 119 of the S&P 500 names are higher today. 32 of the NASDAQ 100 names. But something I've been monitoring kind of loosely over the last few years since the dispersion index was launched by the SIBO is not just the level of dispersion, but rather the relationship between VIX and dispersion. What's volatility in the broad index versus the average component kind of the index?
Right.
As those converge and become closer to 1-to-1,
That's the Zed Francis trade.
it can be a short-term oversold situation. We're not quite there, but we're getting close. About 25 for VIX, DSPX 35. Now, this has been as high as like VIX in the like 12 and, still DSPX like 30.
Right.
So as it gets elevated in terms of that relationship, a little bit more of the, hey, overbought situation.
Love that. That's for the dispersion traders who like the conversation with Zed Francis, Noel Smith. I think Jim Carson has talked to us a good bit about that as well. Anyone who kind of watches those option flows has been very tuned into that dispersion that you've talked about. And basically, as Zed's told us a few times, that when you do get that risk off move, that's going to be a big tell when those things come together.
Because you're basically saying, hey, the basket of stocks is equal risk to one individually. Just mathematically, that can't necessarily be true. Just because every company has their own, idiosyncratic risk. So it goes to show that it's just short-term market, going a little bit crazy.
All right, technically, Rick, on the chart, where are we finding support here? Are we finding support here?
You guys talked about a cavalry charge.
Yeah.
If this was a cavalry charge, so far it's like that one in Braveheart where they all die. So just
just ponies.
Yeah, exactly. But I'm just kind of being facetious here, but it's not looking super good so far because we are dipping below this gap level right here. You can see that was the high point before we had our gap up. Subsequent low point. Now we're breaking through that level near 57.83. Downward trend line still in play. Prices below our moving averages. We have a confluence of our yellow 21-day and orange 63-day. The yellow 21-day, our faster one, is about to cross below the slower one. Not really a great trading signal, but a good visual clue about which way things are going and how the trend is progressing.
Kind of like a twist on a death cross or something, right?
Yeah, the concept is the same. It's just the trend is starting to accelerate to the downside. Things are starting to shift here.
Well, now that I said the word death cross, that's always the end of the sell-off.
Well, I mean, like I said, not the greatest indicator, but, just something worth noting, I think, here.
Yeah.
If we do keep moving lower, this high point here matches up with a subsequent low point there near about 56.73. Notice as well, RSI continuing to trend downward. Red trend line still in play, making new lows on the day as price continues to decline here. So because it is SPX, we don't quite have the same tool. We don't have our volume profile because there's no volume on it here. But in terms of standard deviation channels, we're moving below the -1 channel today. This is where I might have thought you might find some support. We broke pretty cleanly through it so far. So this could be a resistance point now as the day goes further, near about 58.18 or so, Oliver.
All right. So this is a little, a little nibble that we're getting from bulls, but the chart in the short term, boy, you're like pinned under the lower highs. The short term about to slip under the longer term too. Obviously, this has been a sharp move lower. And there's that election gap that now is really closing with today's sell-off. So that's good perspective there. Maybe 5,800, one line in the sand. Let's move into a sector here that's been really important, Alex. I want to talk financials because the banks have been really strong. I mean, they literally put in highs 2 days ago for the S&P Banks Index for financials, and regionals have been stable. That's changing a little bit here today.
Yeah, it's reflecting kind of the zeitgeist, which is more of a, I hate to use the word because it gets kind of misconstrued, but I don't know a better one, deflationary forces, not inflationary forces. You have a collapsing yield curve, you have a growth scare. That's textbook deflationary force. And so it doesn't mean prices are coming down. It's just more that pressures on the value of the dollar is going down. And you see it in dollar index, you see it in rates, you see it in prices of cuts. You have deflationary forces happening on the market. That's not good for banks that really rely on expanding economic times for their business model. The whole business model is growth, growth, growth. And so if that's finally being scared and there's real scares behind it, not just fear that doesn't ultimately become anything, these are not only outperforming assets that could be repriced dramatically, they could be some of the areas of the market that are hit the hardest.
Yeah. All right. I like that point. So far, they've been holding in, but a couple of ugly candles there the last two sessions. Rick, tell me about it.
Yes, and this is another one where there's some noteworthy technical damage being done here. So it's funny because just yesterday we were making our 52-week intraday highs. Now today we're falling below not only our yellow 21-day EMA, but also our longer-term blue trend line there and our orange 63-day EMA all in one fell swoop. So not really a good development here. I guess you could say that at least we're staying above the post-gap up low point here, 815, that green line, roughly coinciding with another trend line that you could draw. So we have our low point down here, and trend lines are kind of subjective. It depends on how you draw them, who's drawing them, whatever.
Like you got multiple for us.
Yeah, and it doesn't necessarily mean either one's wrong. It's just this one goes along this series of lows and matches up kind of with the best fit for the price activity, whereas our white trend line matches up with the absolute low. So that one has not been broken yet, and that would line up pretty closely with that 815 level. So another downside point to watch. Momentum losing some steam, falling below that 50 midline. Red downward sloping trend line still in play here. So if we were to look at our standard deviation channels and volume, we're in the thick of this volume node right here near 825. Further volume lines up with our moving average, our linear regression line, and another volume node here near about 856. If we were to move lower below the support near 815 I mentioned, the next volume area comes in down here near like 790 with our -1 channel just above.
This is a fun one because the line that you've got here at 815 also brings you right back to the center of these three candles, which is the top of the election gap. So this is a fun place to see where the rest of the market is in here now. That would mean the banks need to come down here basically at 815 to test that support to at least get in line with the baseline kind of market retracement back to the election gap. But I mean, S&Ps now are like in here. So the banks, if they're going to catch it down to the rest of the market, have a long way down. But it seems like there's more support here maybe than the rest of the market, which argues to Lizanne's point, which she's made, which is that this is basically their favorite sector. So I think sector-wise, it does look pretty decent compared to a lot else out there.
And let's not get hysterical. Like I said, yesterday was the highest.
Yeah, exactly.
It is a bit of a haircut. It probably doesn't feel good, but just for perspective.
Yeah, and it seems like support's pretty close by. It's kind of the point of that being the top of the election gap. All right, interesting. So the bond roll here, Alex, I definitely think plays a role to your point. We had the steepening, which banks like the way it was going, but the flattening, is not the worst. I think the banks arguably right now kind of have that fundamental case that unless we're like really, really going to drop off economic activity, they're kind of in a little bit of a sweeter spot than they were during the inflation scare.
Yeah, and I think it just depends on the bank, right? Some of the biggest banks are going to be a lot more prepared than some of the smaller regional banks. And it then just comes down to what areas of the market are hit the hardest. I mean, a lot of these policies are sort of pro-domestic policies. Some of the smaller banks might be a little bit more insulated to it. And it's going to come down to commercial real estate. That pressure exists, and it's still just left unaddressed.
Right. Well, we cleared out some of it, though, with the regional banks that went
But I mean, I just look at, this building we're in, sold for like $500 million, and it just got marked to market at like 80. Like, there's some big drawdowns.
Hey,
so
I'm talking our own book.
No, it's not. I'm just saying that's just real reality.
No, I'm with you.
One thing I will say, though,
everybody's trying to get back in the office.
Rick will get through when he looks at the chart, but we think there's been this dramatic move in the bond market, but the reality is we're kind of just middle of the range for the last year.
Yep.
And again, like you've talked about with sentiment, there was a huge run-up alongside the sentiment in yields. Some of that was just mispriced, and it had to be repriced. I don't know that we're going down to the threes or not, but it certainly looks more likely than it did a week ago.
Yeah, good take on the 10-year. All right, so our last chart here for bonds. And to Alex's point, on the 1-year chart, we are just kind of slipping below that real long-term average. But the thing that I've been thinking about, Rick, is what happens if we cut below here? Does this start to indicate trend reversal? Because then that maybe screams an economic message we don't want to hear.
That would be kind of the conventional thinking, because notice as well, it's the old highs there and then the subsequent lows. So that would be a noteworthy point to watch, right around 4.15 or so, right? Just eyeballing it right there. But you can see that we have broken our trend line, our upward sloping trend line. A big slide recently, a lot of red candles in a row. A little bit of a pause when we hit that purple 250 2-day EMA, now pretty firmly below that mark here. RSI moving into the oversold area, typically regarded as a sign of weakness in a trending market here. It kind of depends on your perspective, though. Some people use it as a mean reversion indicator. Some people use it as a sign the trend is accelerating, in this case to the downside here. That's up to your call as a trader. But when we look a little bit further, a little bit closer here, we can see that on a yearly basis, we've fallen below our linear regression line and our volume profile point of control. So I think those would be two ideas you could kind of use to inform some notion of fair value, kind of like what Alex was saying, that we've just kind of recently fallen through about where you would expect we should be based on the price data, based on these studies here. But one thing I did want to note too, and excuse the label here, I didn't have time to fix it, we are right at our long-term point of control. So this is the area of heaviest trading by far, right around here. You would think that this would be where you might try to make a stand for some support. I'm not saying that's going to happen. Just this is a very heavy trading area. There's a lot of volume above here. It really trails off to the downside. That would this would be a place to watch.
That's amazing. The volume
4.16. Yeah.
Really concentrated there. So that I think I think we're onto something then, basically.
Yeah.
Huge volume node right at the previous low in yield. And moving through that then kind of changes this whole trajectory, because this has gone a little bit more sideways, obviously, since we put in the high at 5% last year. But when you zoom out on the year, and if you were to zoom out further, you could see the yields have been obviously moving higher. So it'd be a big deal if we, I think, get below 4.1. So, and they're selling bonds a tiny little bit here. Thanks, Rick. Good stuff. Nice look at the charts. Excellent work. Thanks, Alex Coffey, for the thoughts there. And indeed, bonds have come off a little bit, actually, because there was a pretty strong bid for treasuries, up about 0.5% earlier. Now, 10-year futures are up 27 bips. Stocks haven't caught much of a bid, though. We're still down 1.5%. Russell down the most. Financials struggling. Market meetup. We're going to check in on some of the other stories going on. NVIDIA's not looking bad right now. NVIDIA 70 bips. So I think there's some dip buying happening along the edges, perhaps.